There we go. The YouTube stream should also be up and about. Jump into trading view. So this morning, we took a long on the live stream on the funded account. We took a couple of trades actually. Right here, if I go to the 1 minute time frame, because that's where I mainly executed. Currently looking to get into a buy for the funded account. Why is this taking forever to load? Come on. All right, there we go. So trading executions for the funded account this morning during the London session live stream. So, god damn it. All right, I think nothing should drop or do any unsuspected things. I'm connected, and that should really cover most of it. Not sure why it's taking so long to load. Let me. Anyway, no, I think we should be fine. We had our market structure shift after we took out the Asia session high. It's right here. It's not loading properly right now. But anyway, right here with this high, we took out the Asia buy side. Retraced, made a higher high, and here we shifted structure, leaving behind two inefficiencies. So initially I tried to short, but I got stopped out, or now I actually closed manually, because right here we saw that we closed above our bearish fair value gap, and I got out with a minimal drawdown, around $35 to $50 loss right over here. Then I tried to go short again, since I saw that we actually rejected from our highest bearish fair value gap, got in short on the new inefficiency, and also got out really quickly once we closed above that for another small loss basically. So down 100, and then we saw the new hourly momentum candle immediately push back to the upside, closing above this bearish fair value gap up here, and then we framed the long of the inversion fair value gap. So initially we kept holding resistance here, continued lower, but we know that we're bouncing off the VWAP. So after the London Open at 3 AM, where we saw this first expansion to the upside, we consolidated, made it look like it's going to go short. We've also tried to short a couple of times, but once we got that 4 AM candle with a new 5-minute bullish inefficiency, we really started to rally. We sold for 4 points or something like that, bringing the account overall back into profit. And really from here with that 4 AM candle, we respected the inversion fair value gap perfectly. Every inefficiency that we left behind afterwards, we respected it to the tick. Right here we had a tiny little one. And the next one would have been up here. We kept on holding that. No reason to believe we're going to go lower. We had another inefficiency right up here. Kept on respecting that. Continued higher and higher and higher. And then, yeah, really, what I wanted to talk about before we get into current price action, what we saw right at the high, right around 5 AM was really interesting. I took it on my 25K account, or not on this 50K account, because I already considered myself done for the London session on that account. Really what we see here during that last half hour right here, 5 AM, all the way over to, let me see, 4:45, 5:29. So that's a half-hour period, and we can really see that the volume has been trapped right up here. That's the volume point of control. We trap volume up high, you say bearish inefficiency now to continue low, and then we aggressively drop to the downside. And if we drop that now down to a 5-minute time frame, understanding that we have trapped volume right at the high, the volume point of control tells the story here. During that last half an hour period, even if we extend it further all the way down to the low, can still see most of the volume has been transacted right around at 4533.5. We can use that to tell that volume has been trapped at the high. We leave behind a inefficiency. We tap, I got tapped into the inefficiency. I simply looked for 5 points. Got in right here. My stop loss was just at this high. 3 points. Targeting 5 points around the VWAP and the new week opening gap, this purple area down there. Then we consolidated a little bit, swept these two equal highs. Nice rejection wick, that's what I would like to see. We perfectly respected the fair value gap low right here. and we continued lower eventually, knowing that volume is being trapped up here, covering some of the shorts back into the downside. And then where we are at right now, I leave that volume profile on here. Let's get rid of the executions. That doesn't matter right now. We consolidated inside the new week opening gap. We swept the low. And then right here, we shifted structure to the upside. I wanted to get in on the breaker block right here on this candle's high. We still have a bullish inefficiency here to target basically 5 points or simply the buy side liquidity. Not sure if I'm going to get filled. I wouldn't be mad if I don't get filled, to be really honest. I wanted the entry on the breaker block. 2.5 points would have covered most of it. It's also the 840 candle, bullish fair value gap. Let's just see how that goes. On EU, now let's get started with some questions. Say hello to everyone. Hey Marley, hey Fade. You guys took any trades this morning during the London session? Ryan, did you? Ending up taking a trade? Let me also check the live stream. Should be going now. Yeah, perfect. Doesn't look laggy. Morning, everyone joining in on the live stream. Make sure to give the stream a like. That really helps it putting it out there. Hello. Woke up 20 minutes ago. Whoa. Well, depending on the time zone you're in. Nice. Which trade did you take? Feel free to chat a chart with us. I think that helps out everyone. Ah, man. I knew it. Trap volume back at the low. If we take a look at the volume profile here, especially during the last half-hour period. 740 from 730 to 755. Volume all the way at the low. And from 8 all the way down to 825. Up here, we retest that, sweep the low, make it look like it's going to go short one last time. And where do we see that consolidation happening? Yeah, right around the VWAP. Like we saw it right after the London Open, we consolidated around the VWAP. That's why I always have it on there. And I'm also testing a VWAP standard deviation approach. I'll show you what I mean. If I put I know ICT doesn't trade the VWAP. I don't care. The VWAP is the most important thing in institutional trading, so screw yeah. Asia consolidation, we touch the third standard deviation on the VWAP. We go back to the median, that's where we consolidate, remember? Then we are super overextended between the second and the third standard deviation here. We move away from it, we trace to our mean. It's our baseline, that's what I like to use it for. What's the time? It is 8:55, so we get a new hourly candle soon. If I would have entered on the fair value gap right here, stop loss would have been a bit too big for my liking. Now I'm fine with the breaker block entry here. 2.5 points. We can also see the W formation with the wicks to the downside. I already wanted to enter right here, but I decided like, nah, come on, wait for your confirmation. Then it's a higher probability setup. But really at this point in time, I already knew what's going to happen. Wick to the downside. Wick to the downside. Boom. And what's happening at 840 eventually? Expansion to the upside. Trapping traders short. 1 push, 2 push. And the third push, we reverse. Looks like I'm going to miss out on this one, so I'm just going to cancel my limit order here. The idea was right, I'd say. Nothing wrong about that. Let's see. Check out the Discord chat. I entered long basically then on the bullish share value gap right here. If I see that correctly, or right at the high. In at 310. Okay. So basically, right here, you saw the Asia high being taken, and you still decided to take a long trade because good morning, Kuch, or good afternoon. Nice channel. Sorry. All right, let everyone, now they should know by now when we start to stream. Check out YouTube. No questions here on YouTube. So let's continue. We almost hit buy side liquidity. Well, we get better. We train every day. Train our eye to anticipate what market makers are up to. Covering longs, retrace back into the new week opening gap. Sweep the lows, the wicks tell the story in this case. And now we have equal highs. We should run them out pretty quickly. That's a new hourly candle. That's where the momentum comes from. We have a volume imbalance on the hourly time frame to the upside, which hasn't been traded back into yet. And what could we see here? You know, I'm a fan of this pattern. Left shoulder, head, right shoulder with a nice W formation at the bottom. We swept sell side. We had trap traders long. We retraced to the 50% of the daily range. Man, nothing worse than me hitting. Let's let it load here quickly. Check out the message on Discord. MSS at 4525.5. It was a slow shift though. All right, let's let the indicators and stuff load up again. So from the low to the high, 50%, we hit that, we consolidate below 50%, even reach the optimum trade entry if we regard this entire move to the upside. ICT fib retracement, hit the optimum trade entry, and continued back to the upside. No reason yet to hit these low of the day equal lows down here. Market structure shift at 4525. That's likely on a 1 minute time frame. Well, I think it was a pretty nice displacement. We had made a higher high, close below the wick, leaving behind two inefficiencies. I played the lowest one that's lining up with the breaker block. So, and afterwards, yeah, we just consolidated, and in negating the first one, I got out. So that we respected the second one, tried to get back in, got out quick enough. And then once I saw the confirmation that we're gonna go long here, I capitalized on it and got it long, recovering the two tiny losses. Just testing and getting a feel for the market, basically. That's what I would call it. So now we have equal high buy side right here. Once again, tap this bearish share value gap and reject it here on the 5. EU, we talked about the long, the 2022 model from the new week opening gap right here, paired with the VWAP to target the Asia session high. We still have our buy side at 1.09555 from the weekly outlook. Same goes for the DXY. We touched the 50% level and we immediately rejected 50% of Q3 to basically this entire quarterly range, 50%. Spoke about that yesterday too on the weekly outlook. We keep an eye on that. But since the Asia session range has been pretty big, I don't know, didn't expect too much for London. We saw the setup, made a lower low, shifted structure, bullish share value gap, essentially played out. But overall, I'd still say that we're gonna attack buy side today if the DXY wants to play along with that narrative. No, 5 minute on MES, quarter past midnight. You mean quarter past midnight? Let me check that again. Four five two five. 4524. Why am I always clicking on the YouTube live stream? 4524.25. 015. We also spoke about the potential shift right here during the London kill zone, right here at 2 a.m. delivered into the Asia buy side. We took the low, we take the high. It's what we've been doing a lot recently, but we didn't see the fair value gap. The only thing that we could have used would have been this little volume imbalance down here. But I didn't like the equal lows below. That's why I didn't decide to engage on this one. Looking for the continuation if we get it. Initially for the reversal. But yeah. Keeping my risk small, managing the risk actively. Now we hit the 50% again here. Let's check out the 15 minute. 15 minute also is looking pretty strong. Consolidate inside the new week opening gap and displays 15 minute volume imbalance right here, which has been filled. Now at least. So we should really don't have too much of an issue to continue higher. Buy side, top right. But we're keeping it low, not trying to get too involved before the 9:30 opening. We see the potential 9:30 setup or head and shoulder setup. We have buy side above, we have the previous day's high and previous week's high above, relative equal highs, perfect equal highs at the previous day's high. So for the short term, I'd say I remain a little bit more bullish than bearish. Now I get it. We have the equal lows also on MES, but you took this as a market structure shift paired with the bullish fair value gap. I see. Basically the low. I see. But wouldn't this have been, I mean, that's just my theory. If I want to see the market structure shift or the displacement, basically that Asia reversal during the early London session, if we already hit Asia buy side, I don't know, I'm usually not the biggest fan of going long once both sides have been cleared. Know what I mean? Let's take a look at NQ. NQ rejected pretty aggressively here. Huge rejection wick. And I think, let me go back to this card. But it did work out, yeah, it did work out. Playing the games of probabilities. The question is, why did it work out? Did it work out because we draw up the market structure shift right here and it simply continued higher? Otherwise, it doesn't really matter what we use. It's only a probabilities game. Some of them are going to work. Some of them are not going to work. YM, what are you up to? Also expanding to the upside. But YM actually took out the low of the day down here once more. So swept sell side again after taking buy side right here. Bearish share value gap, entry continuation lower. And right here, a break in structure. I'm taking a look at YM now because I'm interested in it. I did some back testing on the weekend and YM has been delivering very smoothly. Right here we have our bullish share value gap. And this right here won't be considered as a breaker block. This would be considered a mitigation block. Why mitigation block? I made a video about this. What's the difference between breaker and mitigation block? It's because we didn't take out the slow right here. We failed to make a lower low before shifting structure. We perfectly retest the mitigation block and continue higher back into our fair value gap with our buy side liquidity above. Let me quickly Command C, put the ICT all-in-one indicator on that chart here, fill up my water bottle, and then I will be back. Let me go back to ES. Still playing around in our highest bearish value gap. What I wanted to say though is really look at the dynamic here. How much volume came in on this last leg higher. And we can really use that fixed range volume profile for the scenario, because right here be kind of tough to get a clear market structure shift. I mean, right here it's pretty simple. We form a lower low, higher low, lower low, we shift structure, fair value gap, done deal. But here, I mean, yeah, it really gets tricky, at least on the 5-minute time frame. But let's look at the volume. Majority of the volume came in at the high. I know we didn't get a perfect clean market structure shift. I mean, if we would have wanted to, we could say this is our market structure shift, but it would be kind of a stretch. But what I think is important to understand here is that look at this volume, all this volume putting in at the high of the current daily candle. Daily candle's high used to be here, continued higher and higher and higher. Prices advertising, luring in these retail traders that jump in with FOMO at market price right here at the high. And then what happens afterwards is we snap away from that. Understanding of who is being trapped volume in the market, is a huge benefit for us. We understand that longs are being trapped, and if someone is trapped, it's easy for them to get stopped out. I mean, if you get in long here, right at the high, you set your stop loss all the way back to the low. I hope this makes sense, at least to some extent. If you get in up here where the volume point of control even has been, do you place your stop loss all the way down here? I don't think so. 13 points. Most retail traders don't have super deep pockets, and they likely got liquidated by the time we've been down here again. So understanding that the volume has been trapped here, we leave behind a inefficiency and we consolidate, leave equal highs behind. I shared the setup right here on Discord as well. Let me answer. I'm still following my methods. I keep missing out on trades. Sometimes then fair value gap isn't created, but a breaker block shows as the best entry. I don't tend to trade it unless I see the fair value gap, clean entry. Still finding my feet, and that's perfectly fine. I might transition over to breaker blocks because it's simply more efficient. And if there's no breaker block, like in the example from right here, well then don't trade breaker block. There's not really a breaker block in here. I mean, we could look for this down closing candle here, but if the fair value gap is apparent, it's easy to get filled. Even later on, after I shared the setup here in the general chat, right here, that's where I took the entry. We consolidated afterwards. I didn't check the chart, and then I saw these equal highs. We swapped them. Nice rejection again. We continue lower. It's not really about where price could reject from when looking at the volume profile, especially at this last half hour. Can really see there basically has been 0 to none volume right where we had the inefficiency. We had some little bits of transactions, of course, coming in after this big down closing candle, continuing lower and lower and lower, pushing back into that area, holding resistance right here, continuing lower one more time, and then we fill in that inefficiency properly. We go above the 50%, but we check, we don't give these traders up here, where the majority of the volume has been put in place during that half an hour candle, measuring from 5 a.m. all the way to 5:45, or even just 5:25 to get the 30-minute candle. Not giving them a chance to get out at break even. They might still think, oh, this might be a double bottom, without understanding that they are being trapped at the high of the day. And we can capitalize on that. And if we take a look at the entire daily volume profile, why did I like the long setup here of the breaker block? Why didn't I need to see the low of the day taken out? Well, question is simple. That answer is simple. If we go all the way over till here, we have the volume point of control right here inside of our new week opening gap. So this is the, how would we say it? Let me find a, yeah, point of control. It's the fairest price at that business has been conducted. We're trading a market. If we're buying or selling carpets, spices, whatsoever, there's no difference. We trade the S&P 500. Most transactions. London continues up higher. We retrace all the way back into this area, retesting the volume point of control, and pushing through that needs quite a bit of volume. And we move away from that area. So once I saw this quick rejection here, well, probability is rather on my side that we're gonna hold support here, form. This time we form again another W. And why did this W work compared to the other one? Because right here we understand traders are trapped long. That's easy money to grab if we simply continue lower back to our volume point of control. They're getting stopped out, weak hands, closing out early, because they weren't prepared. They were only prepared to see price continue up higher in a straight line, like it used to do. And seeing that we have a high volume node even here, if we look at the entire volume profile for the day so far, tells us a lot. This W formation, kind of in the middle of nowhere, didn't hold. Bearish inefficiency, we got rejected. New W formation, this time at our daily volume point of control, keeps upholding. I will use that more in the upcoming live streams to explain the concept a little bit better. And we can see right now the highest volume, the fairest price at that business has been conducted. Right here lines up perfectly with the consequent encouragement of the new week opening gap. That's pretty cool, I think. Let me get rid of these drawings. We get rejected. So right now we could draw in our breaker block. It is 9:20, so New York open ups very soon. I still like that long, that overall head and shoulder setup, fair value gap. I think I might still play it. My stop a little bit wider. Let's use a 4-point stop loss to target this right up here. And see what we can do throughout the New York Open. If we get stopped out, I mean, I just end up at break even for the day. This is not something I would take on the trade day account. We could even look to get a entry a little bit lower, right at the VWAP and the daily open, new week opening gap. Let's try that. Reduce our risk a little bit. We have buy side above, buy side right over here. And if we look at this most recent price leg, and again, use our volume profile, fixed range volume profile as our help, can measure from the low all the way up here into this high. Wonder where most buyers started buying, right here at the high. So we shake them off. They weren't prepared for that. They were prepared to see this move continue higher. And what do we have right here? A inefficiency within our volume profile. Right here, we barely see any transaction. We saw transactions down here. Majority of the transactions up here. Equal highs above. W formation at the low. Head and shoulder setup setting up. That's what I want to see. Of course, we could also just be setting up a double/triple top up here, but I know, I like the long more right now. Let's see what happens. I'd say it's worth the risk. Get a pretty good fill down here. Only if we go back below that low, I will get stopped out. Let's open up the chat. Nothing new on YouTube. Guys on YouTube, if you have any questions, feel free to ask me. Before the market opens up, I think it would also be a good time to talk about the Black Friday sale. We started to sell for 30% discounts. If you want to join us on Discord, get access to the ICT all-in-one indicator altogether and also live stream access, there's a 50% discount for the first 3 months of your membership out there. Discount code is capital letters SAVE50. Simply by clicking the link in the YouTube description box below, you can save 50% on the wop.com VIP membership. We also have a Black Friday sale on TradingView going for the next, pretty much 5 days, where you can save up to 70% on your premium subscription or 30% on your essential one. And you get you get 1 extra month for free. So right here, I have to go for the premium one to keep on publishing these indicators. Well, I mean, it's kind of, you either go essential or you go premium. Not much of a difference here. I mean, if you decide to go for plus, well, I don't know, it's up to you. If you're that cheap to not spend that single dollar for the premium, And Take Profit Trader also has a 50% off for life, and you get an extra account for free once you're funded. And Apex Trader Funding, pretty much like always, a 90% discount. Let's see. If you have more questions about the different future funding firms, feel free to ask me or watch the video about it. Yeah. Nice. Yeah, they have that Black Friday discount with 70% off every year. Every year so far, they have had the discount. So we touched our entry where we would have liked to get in. It's 925. Let's see if we get our fill. Yeah, with TradingView, it's always the same thing every year around Black Friday. You get the 70% off on your premium subscription. You always get that extra month for free. So next year, if you sign up, you get you don't run out of your premium subscription because of that extra month. You simply wait and wait for the 70% sale. It's the best offer they have all year round. $217. It's not too much, really. We use it to trade. We use it to do our analysis on a daily basis. I think that's pretty fair. Go back to TradingView. Two minutes until the market opens up. And Q looks rather bearish. I kind of like the setup. So right now, just looking at the volume profile for the entire day. High volume node up here, low volume up there, low volume down here. Is it worth the risk? Well, that question is irrelevant now. Let's see. 3.5 points. Right here below the slow. Sell side. Want to see the support on the breaker block. We have 1 more minute until the New York Open. Expect some volatility. It's Monday without news. Tomorrow we have the FOMC news event. See how that plays out. I like the overall confluence with the new week opening gap, the volume point of control, the breaker block, the VWAP, equal high buy side, W formation. I think that's plenty of confluences to have. Of course, it can still fail, especially after moving away pretty aggressively from the high. 13 seconds to go. We already ignore all that structure. I might cancel the trade even before the New York Open. Yeah, that's a done deal for me. Might still play out, but we closed below the new week opening gap 50%, below our breaker block, below our fair value gap. There's no point in me taking a bigger loss than $87.5. For me, that setup is negated once I saw the close below here, below the VWAP, below the 50% of the new week opening gap. It might still play out and might just be some New York Open, blah, blah, blah. But I try to cut my risk early once I see something that's not lining up with my plan. YM is pumping. Let's see if I get punished for that. This was our entry right here on the breaker block. Maybe for the New York Open, I could give it a little bit of breathing room. Our low hasn't been tapped yet. We got a nice bullish rejection from it. open up with a bearish volume imbalance. 15-minute time frame. Well, kind of. Oh, I love that. Trade playing out perfectly. Me getting out because I managed to cut my risk early, especially before the New York Open. But, well, it still goes down into the journal. There we go. Wait for buy side to be hit next. Hopefully someone took the same entry and is still in. I knew I was right. Well, but I saw a couple of things that I didn't like, so I think I made the right decision here, for me at least. Well done, day trader. Yeah, after this close below the 50%, I really wasn't too confident on the long anymore, at least not before we maybe touched the low right here or the wick. And that's just how I work. I cut my risk early, and this way I would have potentially saved myself 1.5 points. But yeah, I mean, I wouldn't call it predicting the New York Open. I would call it, well, aligning confluences. We saw the same thing happening right here on YM. Breaker block, we close below all that. We bounce off the new week opening gap and still continue higher. So just a little bit of discrepancy at the New York Open. And look at NQ. Already delivered the entire move that we were looking for. Understanding who is being trapped, who's in the money. The W formation at the volume point of control for the entire day. Could have offered it some more room. Well, I will make sure to journal that, watch the live stream recording and see what I could have done better. I'd say 90% of the time at the New York Open, if I see something going completely against that, like this top formation, close below the 50% of the new week opening gap, close below the bullish share value gap, close below the breaker block, I'd say over the long run, saving myself from the losses. Hope that makes sense. If you guys have any questions about that, feel free to ask. YM is pushing nicely. Mitigation block kept on holding. Perfect equal lows. Well, depends what you consider kept on holding. Basically, we get what's happening here. We go long. We shake off all these longs. Like we said, we looked at the volume profile, measured from the low to the high. Most of the volume entered right here. And if we look at just this uptrend, let it load here quickly. Didn't we see it earlier all the way up here? I'm pretty sure at least. All right, we took buy side liquidity. We continue. So far, everything is playing out according to the plan. We hit the old high. Guys, make sure to like the stream. That really helps with putting it out there. And like always, feel free to ask me a question. That's the best time to do so. So we hit buy side. The high of the day has been taken. 4534. Let the power of 3 indicator update here within the next couple of ticks. Take a look at NQ. NQ already flying. Did it take out? No, not yet. Previous day's high and previous week's high. That would be my overall drawn liquidity for this move to the upside. We'd see if we maybe get a inversion fair value gap entry for the funded account going. If we close above, my take profit target would have been hit. Been nice, 7 points. God damn it. But at least we saw what's coming. Not perfectly, because we closed below fair value gap, breaker block and all that stuff. Really made it look super bearish before the market opened, but that's what they do. That's their job. And they're pretty damn good at their job. Take a look at the 1 minute. 1 minute fair value gap filled, and we continue higher. 2 more minutes until this 5-minute candle is closed. Took out the high. Let's see if we just keep on expanding into the previous day's high. If we hit that, I'm not really looking for longs anymore. Like we said yesterday on a weekly outlook, previous day, previous week's high is what we're looking forward to target. We just keep on pushing. 1 minute time frame, volume imbalance further to the upside. I would be looking for a long maybe around this area. Stop loss would be relatively big. Reward. If we get some structure being set up, yeah, we could be looking for a short. But overall, I think before I take a short, I want to see these levels being taken. YM also took the high of the day. EU, like we said, continuing further into buy-side liquidity. New market structure shift being formed right there. The XY continuing lower. For the short, what we want to see, cool, is continuation higher, a low being formed, take out the highs, maybe another low, and then the displacement back into the Asia session low. No, I think I should be fine with mini. Can cut my risk pretty early on. So right now I'm looking for the continuation long of the inversion fair value gap into buy-side liquidity. We have a volume imbalance, so we might not even retrace. Keep an eye on that. Ideally, we would like to get filled and immediately reject up, leaving the volume imbalance open. This would be the aggressive entry. If you don't want to wait for price coming to you, enter on the volume imbalance. Yeah, let's just keep on looking. Further to the left, yeah, that would be our previous day's high. If we go to the 5 minute, this would be our highest bearish inefficiency before we take that out, and that's where we're getting held up at right now. Bearish value gap. We're already pushing. Unfortunate without tapping us in. Missed by 1 tick. No? Yeah. No, 2 ticks. With our drawn liquidity being up here, we already spoke about that. Previous day, previous week's high. So Friday's high and Wednesday's high from last week. Let's take a look at the regular trading hours opening gap, where that is coming in at. I think there shouldn't be a gap at all, and if so, we should have already filled it. Yeah, down here. Basically where I decided to get out. Potential new bullish value gap here on the 5 minute time frame. Still 1.5 minutes left before we get confirmation. If we immediately close above this bearish value gap, I mean, you could even play the inversion of here, but yeah, your risk reward really gets a lot smaller, so I wouldn't do it. I personally, for my funded account, wouldn't do that. For a challenge, maybe, with a pretty easy drawn liquidity up here. Previous day, previous week's high. EU keeps on pushing higher back to the London session high, while the DXY continues lower. Now we have a bullish fair value gap paired with our inversion fair value gap. Three, two, one. Okay, we open with a bearish volume imbalance, but an up closing candle, so this volume imbalance remained open. Keep an eye on that. So the first 15-minute candle after the New York Open is in, with a very strong close. So let's see what the next 15-minute candle wants to do. I'm obviously looking for a long now on the bullish value gap. These 2 ticks don't really matter, and I like that upper bullish value gap right here. If I would see the close below the bullish value gap and below the inversion, I would start to cut my risk. Let's see if we get filled. We have nice equal highs above. paired with the other drawn liquidity that we already spoke about a couple of times. Unfortunate that I closed the trade down here. Man, had a good gut feeling, really in sync with the market today. But a little bit too cautious, I'd say. No questions on YouTube? I mean, that's fine. No new questions on Discord. Jump back into TradingView. So we got tapped in on the high of our fair value gap. Measuring out our most recent displacement to the downside. Standard deviations. Oh, look at that. 3.5 standard deviations from our most recent fake out move. So this was the last time we swept sell side liquidity after shifting structure. And we spoke about why we don't need that to happen really at the sell side liquidity pool from 115, because our volume profile, pretty hard to push through that. So we saw that overlapping with the new week opening gap, overlapping with our London session or New York, London Open basically, overlapping with the VWAP. We sweep the low, form a W formation at the low, shift structure, bullish fair value gap, breaker block, all that stuff. That's why I had a limit order right here. I got filled, but I closed the trade once I saw the invalidation. We closed below the bullish fair value gap, below the breaker block, and below the 50% of our new week opening gap, while we still kept holding our volume point of control. I mean, I just had it on the chart, and we continued to deliver into buy side. Equal highs above, nice rejection here. Ideally want to see that volume imbalance here being respected. We will see. Giving it a 5-point stop in case we immediately drop lower below this fair value gap right here. One tick below actually. So yeah, really nice, in sync with price today. Yeah, and then from here, from our new week opening gap, VWAP, from that most recent displacement where we had the market structure shift afterwards, we haven't taken out this low yet with the New York Open. So yeah, just measuring from the low all the way to the high, projecting standard deviations. Looking pretty good. We already hit 2 standard deviations, while I'm also looking for the retracement entry, and 3 standard deviations almost to the tick lines up with our previous day's high. 3.5, that's usually where we most of the time see a trend pause for a little while, as well our previous week's high coming in perfectly, lining up even to the tick. So I think that's a pretty good continuation entry. Of course we can get a deeper retracement. No questions asked. 7, 6, 5, 4, 3, 2, 1. All right, we close back below the volume imbalance. Might want to retrace a little bit lower, retest the inversion fair value gap. Well, I'm surprised no one is asking questions, but I guess everything is crystal clear then. No need to ask questions. Equal high buy side. Take a look at YM. EU hit our daily buy side liquidity level. We spoke about that yesterday on the weekly outlook live stream. It's also recorded, so check it out in the VIP Discord section right here inside the weekly outlook if you haven't yet. We spoke about that being the target on the daily time frame. The way we bounced off this bullish share value gap, we keep on going higher. We close with basically no wick to the upside on the DXY, with no wick to the downside here on the daily time frame. Rejecting of the CPI bearish share value gap right here on Thursday, coming back into it on Friday, continuing lower, closing below the consequent encouragement. That's why we really just looked for opportunities during the London session to take the long. I mean, Asia already had a pretty strong trend. We opened up with a new week opening gap, pushed above that, retraced below the 50% of our range, kept holding support on our new week opening gap, consolidated there. Everyone who has a personal issue with the VWAP, or that I'm using the VWAP because ICT doesn't, well, you can watch ICT's live stream if you want. Oh yeah, right, there's none. Just kidding. But market structure shift, bullish share value gap, the idea stays the same. We just use it as confluence. VWAP, volume weighted average price. You can't completely take out the volume out of the entire equation. Right now, if you do ICT stuff, it's all about time and price, but you kind of ignoring that third variable, which would be volume. So trade is playing out nicely. Let's see if this candle can close above our bearish share value gap. I'm looking for the previous week's high. YM also pushing. Really want to see the close above here on this candle, since we already show so much strength to the upside. It's really unfortunate. Where did I get filled, by the way? I went long right here and I got the perfect close. Perfect. Don't reject up here on me. We took these equal highs. I want to see the close at least above the 50%. Otherwise, we might just chop around here for a little longer before we take out our buy side liquidity. Let's see, 15 seconds to go. Kind of took lots of inspiration from that agent. And now I finally understand why your Discord name is Agent Smith. Believe it or not, I never seen Matrix before. I watched it last weekend. Now I'm in the Matrix. Sucks. I know your last name, Smith, as well, so that is why it isn't. Well, you can be glad because my name isn't Anderson. Just joking around. It's also important to, like, I don't know, not be glued to your chart once you're in the trade. I mean, all you can do is now to manage your risk properly. Take a look at NQ. NQ is still showing strength, but we could end up consolidating for a little bit. So let's see. Oh, you were a private investigator. Interesting. Interesting. And that's why the agent. Huh. A PI. Well, I let you know once I need your services. Still nothing new on YouTube, guys, come on. Don't remain so silent, it's almost scary. And for everyone new that just joined in, Black Friday on TradingView, 70% off premium subscriptions. Right here. That's the best discount you get all year round. Also a 50% discount on our VIP membership, where you can join our London session live streams, get access to the trade signals, the ICT all-in-one indicator, and much more. Weekly outlooks, daily market analysis. And yeah, all that stuff. Simply use the discount code in capital letters, SAVE50, and you get access to that. Take Profit Trader also has a 50% off discount for life, and Apex, because it's Apex, has a 90% off discount. Really worth it if you just want to, yeah, play around with futures, get your first Apex account, pay $15 for a 50k account, or even, I think, around $10 for a 25k account. Not putting yourself at too much risk, and you, yeah, really get a feeling of what it is like to trade futures directly on TradingView. And there we go, boys. You see that precision entry? 0 ticks drawdown, my friends. Going to throw my stop. 0. Huh. Not the real CIA. That's cool. Fuck, you look scary, man. You looked scary. I don't want to be followed by you, that's for sure. YM keeps on going higher as well. EU, well, EU is doing EU stuff. Previous week's high is gonna be the next target. Wait for this candle to close, and we have a new inversion fair value gap. Just being patient. Worth practicing that. So even though I got out of the long setup right here, I liked it, but yeah, this 925 candle really screwed me up, and we yet delivered into my buy side target. I had a trade, day trade, I actually caught it. We entered right here on the VWAP, lined up with the breaker block, stop loss just at this low, so 3.5 point risk for a potential 7.5 point reward. Really worth it. I mean, it played out immediately, calling the market open, and let's watch our take profit being hit, and we're done. That's it, my friends. 0 tick drawdown entry filled to the tick. To the fucking tick. Now we're inside our 3.5, -4 standard deviation area. Let's see what happens around that. Continue the tape read. That's usually where we hoard for a little bit. After having taken out Friday's high and Wednesday's high, the previous week's high, we can really, well, first of all, save the chart template and put all these drawings into a new folder. That's the volume profile. The ICT all-in-one can go here. Just restructuring my object tree here quickly. let's put this into, let's call this group the Monday group. Can delete that later on, but at least then it's cleaned up. Intraday is all this stuff. Well, that pretty much is Monday. So let's just put the Monday stuff into intraday. Then we can hide intraday to get rid of all these drawings and turn on our main daily analysis, going to the daily time frame. And if you wonder how the ICT all-in-one indicator automatically disappears if I go to the higher time frame, well, it's simple. I have it set to the 1 hour time frame, so I want to see it on the 1 hour time frame and below. So what I do, I wait for the indicator to load up, of course. You can either do it right here and say visibility, go into visibilities on intervals, and then you say current interval and below. You click on that, and then if you move to the daily time frame or 4 hour time frame, it's not really gonna annoy you and you only see your daily analysis. You can do the same thing with your photos right here. So the main daily, you can go to the settings and change the visibility to say you only want to see it on the daily time frame. I don't. I sometimes want to look at it on the lower time frames. But right here, so we now took out this high, continue to push even higher. We'll see if that can continue on Monday. I'm already pretty content with that. If we watch the 1 hour time frame, well, no, that's not very handy to see. 1 hour time frame going back all the way over here. Now let's go to the 4 hour. It's just messy. Can see that it's 10 a.m. now, by the way. We get a new 4 hour candle, so we will see if that momentum can continue or if we get some sort of rejection. We hit the 4 hour bearish share value gap. Not sure if we hit the consequent encouragement of that. Let's check that out. Nope, not yet. So we keep an eye on that. We did all the analysis on the weekly outlook. I don't want to share too much of that when I'm streaming on YouTube. That's would be kind of unfair to all the members. But well, that job is done. We watch it on a 5-minute time frame. Market structure shift wise, yeah, it'd be kind of tricky to, well, maybe market structure shift right here. We could still target, of course, if I put on the intraday analysis again. Market structure shift below here, maybe. But I think that would be kind of a stretch. So what we would like to see, ideally on a 1-minute time frame, higher highs and higher lows being put in place. And then our nice displacement, trapping volume up high for a reversal. Eventually, we hit the negative 3.5 standard deviation. That is done. Let's take a look at NQ. NQ also off to the races. Took out Friday's high, but still didn't take out Wednesday's high, the high of the week, or the previous week's high. A static reference, doesn't change over time. It remains the same. So I like to have that on my chart. So yeah, based on that, because NQ didn't take out that previous week's high yet, I'd say we could see some more higher prices on ES. But now let's really do question time. Not really looking forward to continue to trade this. I mentioned the draw on liquidity. I showed the entry. I mean, you can't ask for much more. Explained the entire reasoning behind. Why I think it's going higher. Don't want to participate at the high. We played the long. We played the short. Right here, unfortunately, yeah, kind of silly, but I mean, at least we secured 8 points to the previous week's high. That's pretty damn good. But so far, there's no sign for bearish order flow. We kept on closing above the previous day's high. So let's see if that just wants to continue, because NQ might want to take out its previous week's high as well. Take a look at YM. YM has a little bit more to go, but usually delivers rather quickly. So right here, what would this be on YM? Make a little question round. Let me maybe go to a 15-minute time frame and hide the drawings. Would become a little bit easier. Hide the ICT all-in-one indicator. So just looking at price action of the day, daily candle opened up right here. What's this highest up closing candle right there? Let's see if anyone knows the questions to that. Going to use that picture to show I have CIA friends just to fuck with them. Just stick to what works for you on a consistent basis. If it fits for you time-wise to trade London, just keep on going with London. I could serve criminals that the sheriffs couldn't find them, easily caught, difficult cases. Well, let's get back to YM here. That would be a breaker block, basically a unicorn setup. So right here, just following structure, we could also use the ICT all-in-one indicator to show us that zigzag and the higher highs, higher lows. If we give it some time to load, of course, because it's a power machine. Over 2,000 lines of code. So what do we see right here? Sometimes it also helps to hide your price action chart and simply look at what's happening right now. So Asia consolidates, get the move to the downside. Here we had our 2022 model long into buy side liquidity after taking buy side, trapping traders long at the high of the day. They do the most amount of damage by bringing this lower, taking out the new low of the day. So we form a lower low, higher high, and a lower low. We go back above this higher high, which makes it a breaker block. And not just any breaker block, a unicorn breaker block. So we would look for a retracement into that area roughly. I think on the 5-minute, no, we wouldn't have seen that just yet. Paired with a bullish fair value gap for the continuation higher. I hope that makes sense. If you guys have any questions about that, feel free to ask like always. Don't be shy. With our drawn liquidity based on the daily, and voila. Getting pretty good, even with EU, just by looking at it during the live streams on a daily basis. Found a new higher high. So on the 1-minute time frame. If you like that, I'm not going to take it. I'm content for the day. That could be our market structure shift level to attack equal lows, short-term low, maybe reverse after hitting our negative 3.5, negative 4 standard deviation, continue all the way back to the midnight. You get the idea. We can paper trade that. And since there's likely nothing available on the 5, there won't be any trades for me with the trade day account, unfortunately. But maybe 11 AM is the cut off for me to look for shorts. Afterwards, yeah, just gonna let that sit. And start the journal. Like said, NQ, at least I think, didn't take out the high yet. Take a look at NQ. Oh, did it? No, not yet. PPI news candle, if you guys remember from last week's live stream. Where we said, okay, high of the week, pin bar rejection. Well, if this is not going short, I'm going to stop trading. Pretty easy. 1 minute time frame. No inefficiencies we're reacting off, but we're still holding support on that previous day's high, simply continuing up higher. We keep on watching it on A5 just because it's calm. Saving some mental capital for maybe later during the PM session. Good morning, IKEA boy. Hi. Feel free to ask questions. Make sure to like the stream to give it a little bit more attention. Let's see, guys on YouTube that are watching, have you taken any trades yet? Did you take the same trade as I did into the draw and liquidity that I outlined? I mean, yes, the stream on YouTube is a little bit delayed, but I'd say still possible because I had it right here on my chart. I'm not hiding it, saying like, I don't know. I remember when I used to hop around on YouTube live streams, people were always like, you don't see the executions. They always just tell you, oh yeah, I got in right here and sold up here without showing you the execution. And I think that's bullshit. I literally had my limit order drawn right here. It was on the chart for solid 5 minutes. So when this new candle opened up, I said that I'm going to move my limit order to the fair value gap. I got filled to the tick and closed right up here. Pretty obvious. Not many ways for me to hide it. If someone hiding it, if someone is hiding something about their trades, well, that usually has a reason. Like, why would you hide it if you're so profitable and people watch you and watch to learn from you? Like, where's the point? And then just think, what would you do if you weren't profitable, but well, not really profitable, I'd say consistent. And you have a few people watching you and, well, not showing your execution and always saying like, oh yeah, I got in long here because we had the breaker block set up, W formation, new week opening gap, super obvious, 10 points, easy going. And then they usually tell you once it's too late and you start to FOMO in, ending up buying the high, like right here at the end of the London kill zone. So we keep on pushing higher, but every time we hit that area between negative 3.5 and negative 4, like we said when price was down here somewhere, it's getting rejected. And right here, if we close below that low, we could be looking at a bearish market structure shift after having taken our sell side liquidity. This becoming our breaker block. Let's see, maybe we can get in a 1 minute scalp. Understanding what price is doing, where it has delivered to. Message on Discord. No, not on our Discord server, one of the many I'm in. We also started a little crypto corner down here. So if you're into cryptocurrencies, airdrops and stuff like that, I'm really into it. I've been in the crypto space for a long time. And yeah, well, if you're interested in that, feel free to chat with us in there. Okay, so we didn't close. I would label this as a sweep until now. I want to see the close below. Right now, once we hit our target, we just go sideways. Perfect. 10 a.m., new hourly candle, new 4-hour candle. We understand the timing. 10:15, so this is a new 15-minute candle. And I guess we have reason to believe that we could retrace a little on the 15. Just a little bit coming from the high of the month, high of the day, and high of the current week. Always keep that in mind. Our month has been so far pretty bullish. We just took out the old high of the month, Wednesday's high. So what we formed right here is a new high for the monthly candle. Always think in fractals when you're trading. You can use the power of 3 indicator, of course, too. simply set that to the monthly time frame, and then you see that same thing. Go back to the 1 minute. Now it looks like we're gonna close below. We already delivered into the fair value gap, but for me, I always like to see the confirmation close below, and then I'd like the fair value gap entry. Otherwise, it's just too risky for me trying to catch a top. Can burn yourself in these consolidations really quickly. Covering some shorts. Now we have the structure shift, so let's try sell one limit. We're already filled. Put our stop loss above this candle's high and target these equal lows. If we see the close above this 1 minute bearish fair value gap, we can already close our trade. We have equal lows right here, so it's all looking pretty good for a short. Let me actually take a look at crypto, do something else in the meantime. We are filled, we have our stop loss. Like I said, what we wouldn't want to see is a close back above the bearish fair value gap. If we see that, and if you're in this trade, maybe with micros, maybe with multiple minis, I'd say would be healthy to cut some risk. If you're just in with one mini, your stop loss isn't super big. That's only 2 points, maybe less. But we would expect resistance from this area paired with the breaker block after a confirmed market structure shift close below. Understanding that we hit our drawn liquidity, but well, can still be wrong. We put in the structure we set. Once we hit that liquidity, put in higher highs and higher lows. Now we displace below that. But we can use early signs for invalidation for the setup, like closing above the bearish fair value gap. We even have a tiny little inversion fair value gap right here, right at the high. So it just lines up with the overall narrative. Bitcoin is up nicely again. Nice. My longs are playing out. Dogecoin back at 80. My chain link. Nice, nice, nice. Let's put on our standard deviations. That would be the last interesting thing to see if we hit any of them. Let the indicator update. No, we did not yet. No source code. I think my computer is getting pretty busy. Consolidate here, not ideal. Usually once we want to see that move away from the high, we want to see that happen quickly without much hesitation. Let's check the daily volume point of control if that's still at the same area. And ask me some questions. Please do. Volume point of control migrated now. So it used to be down here where we took our longs from the New York Open. And now most of the volume is being put in right here at this high. Are they shorts? Are those retail traders getting trapped at the top? That's the question of the day. But we see how it jumped from down here up to here to the new high of the day. And how we interpret that, that's pretty much up to the trader, how we use it. Ideally as confluence. Nice, so we took these equal highs here. Right here with this wick. Let's see if we can now hit these equal lows. Quickly added a second contract short. So these equal lows. Target number 1. Let's make this a red line. No, not orange. Make it a green line. These equal lows right here. And these equal lows right there. Round to Viva would be my final target. Of course, we could also anticipate this being the high of the day, going all the way back to the Asia session low, but I think it'd be a smart thing to do, especially with Apex and a live trading drawdown, to take profit when profit is available. If you trade with Trade Day or take Profit Trader, where you have an end of day calculated drawdown, or Topstep, for example, you can hold on to your trades. It doesn't matter what happens intraday with your account balance. It's only the end of day balance matters, really. All right, we hit these equal lows. We move away after we sweep. From our drawn liquidity, that played out just perfectly. So right now, after our idea has been pretty much confirmed, we move our stop loss to this high. No reason to risk more than necessary. And we collapse. Like said, likely still nothing on the 5-minute time frame. Well, short-term low would have been kind of hard to come up with. We caught it on the 1. So I think this partial should be fine. We've eventually collapsed. Go to the 5. Go to the 15. Yeah, I think it should be fine. Move our stop loss to break even really here. Back to the previous day's high. So we hit target 1, target 2, target 3. VWAP. So a baseline. Let's see what happens once we get back to that area. Today really, at least for the New York session, a really easy time to read price. So going from here, we want to see this bearish value gap being respected to deliver price lower. Wow, today played out perfect. That's nice. Drawn liquidity was right. Even our New York Open anticipation correct. -3 to -4 standard deviations. We looked for a rejection up here. Previous week, previous day's high. We shift structure. We waited for the close. Got in right here on this bearish value gap. We nicely continued lower, hitting target 1, target 2. Target 3 would be these equal lows down here, and also the beginning of a 15-minute bullish value gap. 5-minute candle closed. So we have a 5-minute and 15 overlapping down there. Take a look at YM. Rejection wick on the 5. Take a look at EU, putting in that pump and dump formation after taking out daily buy side liquidity. So let's see how that plays out. Mm -mm 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 -mm. 50%, we can use that as confluence. Like I said, this could still be a short trap, because NQ didn't take out the previous week's high yet, and we could still see that happening. Let's take a look at the 5-minute time frame here on NQ. NQ actually displaced, putting in a decent structure shift right here, close below, breaker block. If we check that as on the 5-minute time frame, because here we can really see structure. We moved up, had a short-term low with a higher low to the left, higher low to the right, made another higher high, and then we displaced right here. Now we would wait for the retracement for the continuation lower after taking out Friday's high. Be careful with that one, but that's the 2022 model. Right here, previous day's high, we just bounced off that one. Buy side taken right here. And more buy side up there. We could measure the 50% of this entire wick to get an idea, but I'm not going to do that now. I'm not trading NQ usually, just updating it. And well, continuing the tape read. What's this right here? A short trap. Because we closed back above the consequent encouragement. I'm going to get rid of this trade. That's why, especially if you trade with your Apex funded account, you wonder why your margin for the day, well, is going lower and lower. It's because you don't realize profits. So with Apex, you really have to be cautious of that. It's a live trailing drawdown. Right here, the invalidation, where I would have taken all the profit for me would have come with the close above the 50%. That's already something I wouldn't have liked to see being in this short. And then not how we open up. Bullish volume imbalance immediately afterwards. And what else do we see here? This price leg to the upside is delivered efficiently. No bullish share value gap right here. And here where we had the potential to leave behind a bullish share value gap, we retrace perfectly to the high of that 10:26 a.m. candle and continue further up. Bullish volume imbalance remains open. Now we have a inversion fair value gap here. I would look forward to target higher prices. The short, in my opinion, has been negated. Looking for sort of a V-shaped recovery. We already used the inversion fair value gap right here. Let me, come on. As support, and we immediately move away from it. We had our volume imbalance remained open. We closed above the 50%. We saw immediate rebalance, not once, twice, not leaving behind a bullish share value gap right here. Instead, we retest the perfect high at 10.27 like we did right here. Buy side, buy side. Trapped shorts. If we look at our market profile, volume profile, measuring from low right here to this. Okay. Let me measure from the high Most of the volume came in right here. Overall, it could still play out, but that's not what you would like to see being in the short. Just from a tape reading perspective. So let's see, middle line, we leave that on, close back below it. Wouldn't play with the narrative, really, of this being a V-shaped recovery. We don't have bullish fair value gaps on here. We only have our inversion fair value gap right here. 5-minute time frame, being more choppy than right after the open. Bearish volume imbalance below the 50%. So let's see. Just practicing. So closing back below the consequent encouragement with a new volume imbalance. Want to see exactly not that happening. Just giving us a harder time to read after 10. Before 10 it was really easy once we hit the draw on liquidity. So a close back above the 50% is something I wouldn't be looking for, where I would get out of one of these short contracts. Buy one. Let's see if we have any questions. But getting stuck into here, that's why I on purpose use my paper trading account, because I know myself. And trading is, so many people always keep on saying that. Trading is more about yourself than you initially think at the beginning. And I know myself. I've been there, I've done that, and you're on that high. On that winner's high, like a runner's high. I don't know how better to describe it. You call the market, it happens out to the tick. We get our fill right here. We have 0 ticks of drawdown. We catch a 8-point move. Everything plays out to our part. And yeah, you just get overconfident. Why give away that money again? Why give it away? Let it settle in. Do your journaling. If I wouldn't be live streaming right now until 11, then trust me, that would be no way I would still be risking yeah, sitting in front of the charts. Too much risk. I know myself. I always say, like, yeah, afterwards I won't take a trade, but well, likely been in that same situation, and you still end up taking trades. So we see overall the inversion fair value gap, even though we closed below the 50%, still kept on holding. We took the high. So we got out of the short quick enough once we closed back above the inversion, and the other contract once we closed right at the high back above the 50%. And like we say it so often, most traders are actually not that bad at making money, but they're really bad at keeping that money. Because you can make more. You have that impatience to win your challenge, that impatience to hit the 1 million. Like, I don't know, because that's what social media kind of shows you all day long. Oh yeah, I made 30K on this trade, blah, blah, blah. Just focus on yourself. Do it step by step. You hit one nice trade, play it out perfectly, journal it, think about it. Yeah, journal it, take some notes, and call it a session. And or if you still want to practice, use the paper trading account and actually practice without doing any damage. can see how often we've already been wrong around this area now. Understand that price has already ran significantly for a no news Monday. We hit our major draw on liquidity, being the previous week, previous day high. This was handed for free basically. Like, come on, wasn't really hard to spot that. What price is doing right now? Well, we caught the short right here. Potential for 6 points, 5 points, if that would have been my funded account. Partial at all costs. Always partial at 5 points on my funded. And then move the other contract to break even, whatever. Take profits once we see the close back above 50% with the volume imbalance. We go back above. Now we open again with a bearish volume imbalance. Back inside our inversion. We could frame both right now. Overall, with the market structure shift, I'd say the probability for shorts still outweighs the chances that we could continue higher. But I think we've done good enough. On NQ, we filled the fair value gap for the 2022 setup. Right here, we had our market structure shift. Bearish fair value gap, we filled that in, and now we want to see price to continue lower, ideally. YM almost made it to make another higher high. Let's take a look at EU and DXY. Yeah, EU really not nice today, but we still managed to hit our daily objective. Get an on a 2022 model earlier during London. And see that we just bounce around here. Look at the 5-minute time frame. Yuck. Wicks to both the up and down side, whereas initially we only had wicks to the downside. W formation, new week opening gap, VWAP, volume point of control, pre-New York Open. Boom. Drawn liquidity, easy. Inversion fair value gap, leaving behind a bullish fair value gap. Kind of, yeah, breaker block. Or just old resistance, turn into support, highest up closing candle for the London session. That's all a breaker block really is. We just use it to interpret price as an ICT trader. Yeah, not really interested in that price action anymore. So guys, do you have any questions? I think I will end the stream then. So now would be the time to ask anything. I will be back tomorrow for the London session. And let me check out YouTube. They're 1 minute behind, so we'll see. 18 viewers. That's pretty cool. Thanks guys for tuning in. Like I said, if you really want to take full advantage of that learning opportunity, ask questions, please. Nothing from you. Fair enough. Until tomorrow, Ulrich. Make sure to check out the accumulation zone trading, wop.com shop, and use the discount code SAVE50. It's also on our Discord server right here inside the Black Friday channel. Special 50. Yeah, it's actually special 50. Sorry guys, I thought it said save 50. So it's the code special 50. Sign up right here, 30 bucks. And yeah, also make sure to not sleep on the TradingView Black Friday sale. You get 70% off plus 1 free month, depending on which membership you go for. I'd say makes sense to either go for the essential if you don't really need that much from TradingView, or the premium, that plus package in between, I mean. just want to scale it up. Take Profit Trader also still has a 50% discount code, and Apex Trader has a 90% discount going on. Other than that, I think we had a pretty good New York session. Let's let that sink in. Do our journal. I'm gonna use my Bento book and my OneNote. I spoke about that last live stream. So if you, maybe from your work, maybe because you're a student and you get access to Microsoft OneNote, or you because you bought a license back in the days, or you cracked it, I don't care. But I think it's a pretty cool method of how we can journal our trades and really put our thoughts on paper. With price action moving around, taking screenshot while it's happening. Unfortunately, it's hard for me to do when I'm live streaming, but I simply do that in hindsight then. And then you can categorize everything, look at it on your iPad if you want to, or your tablet, doesn't have to be an iPad. And yeah, journal everything. And then once the week is over, look at your trades and don't be dishonest with yourself and avoid putting your losses in there. I know it sucks putting a losing trade into your journal, but that's the ones you're gonna learn the most from. Your winning trades, I mean, yeah, your winning trades should already be based on your setup and some guidelines, some rough guidelines that you follow, like the market structure shift at the high of the day for some shorts. I know it sucks, it's a pain in the ass to put a losing trade into your journal, but that's eventually where you're gonna learn the most from. It's a free option basically. Most of the people have OneNote to journal your trades. I know it's not really there to track your performance. It's more about tracking your thinking out loud on here. And then you can always use a different color to recap everything on the weekend and really try to make a progress out of it. What can I do better? What did I do wrong last week? Did I actually end up FOMOing into trades? And okay, where's that? Of course, you can also use a journaling software. I use both because then it's also easy to keep track of your PL. Still pushing higher here. I use Bento book for that. Has been created from one of our community members on the accumulation zone, and he decided to make it public for everyone to use. It's a pretty cool trading journal. We're working on some new stuff like notes and all that stuff, so it's closer to what I already do with OneNote. But yeah, well, if you don't want to spend more money next to your Apex memberships that you're already paying, some people where you can learn from, study from, ask questions to, then I don't know, I'd say OneNote is the best option to journal your trades. Really don't skip that part. Everyone is saying that, and they're saying that for a reason. That's where you can really learn lots about your trading. ESU. You can look at that in hindsight and see like, okay, took sell side followed by strong displacement. Right here, we took the buy side. We had a strong displacement. We have a breaker block, bullish fair value gap, target, buy side Asia high. Respected the 50% retracement level and breaker block. We cleared buy side, but left a big discount. Idea would be that if we're bullish, price will find support here. Just putting your thoughts on, not paper. You can use paper as well, but kind of hard to put your screenshots on paper. You get the idea. Save a little bit of money. Inversion fair value gap. Right up here now as well. We close above. We use it as support to target buy side. So let's see. Head back to the live stream section. Yeah, your winning and losing trades are in a Excel spreadsheet, XLS sheet. Keeping track of your performance in terms of dollar and percentages is also important, but I think it's really even more important to keep track of your thoughts, because you can always go back and check your performance on your broker statement with TraderWeight. Simply log into traderweight.com, go to your history and you see all that information, really, how much you made on what specific day. Of course, it still helps, but I think really, yeah, journaling what you think, you're feeling, even if you want to, yeah, my thoughts are pretty crazy too. Just put it on paper or just put it in your journal right here, and then you can, even if you feel afraid to take an entry, you're like, 9:30 is coming up, put it in here, add a page, call it. The date today is the 20th of November 2023. We're trading ESZ 23. Put some structure into that, and then, okay, we took our London session trade, put in some thoughts, and even if you're sometimes afraid to take a trade, take a quick screenshot, put it in your OneNote, it's for free, and then say, kind of afraid to take a long here before London Open, for example, but my intuition, gut feeling, whatever you want to call it, propels me to take the long. I'm just too afraid. Be honest, you don't have to share that journal with everyone else. It's just for you to understand your thinking process. And then you keep on doing it while you're trading. Just have it open in a tab, and we see, okay, take a screenshot, open up OneNote, keep on track what we're thinking, what we want to see. Try to be as detailed as possible, and yeah, see what a recap on the weekend gives. Like, the insights you get from that is really super valuable. You get more insights from that than any other video that you might be watching over the weekend on YouTube. How to improve or blah blah blah. Because in the end of the day, it's all about you. How you think, how you come up with certain trades. Like, for example, let's say we saw the inversion fair value gap. We saw that we likely look for support here. We close above, we used it as support once, twice, and we continue to expand into buy side. Let's say because you already made profit today, you just keep track of that, and afterwards, if you recap that entire stuff, you're like, my intuition actually ends up being right a lot of the times. Or most value that I've learned is from the days where I simply don't stop trading and I put down my thinking progress on my OneNote or whatever. You can use Notion, I guess, would work the same way. I like OneNote because I have the license, it's for free, and I like how I can structure it, put the screenshots inside, and afterwards look at it on my iPad. It's all on there. I go up there, read through it. I'm like, oh, okay. So that's what I'm thinking when I'm over trading. Interesting. Starting to recognize the pattern of yourself. So even though your thoughts are pretty crazy, who gives a shit? Put more attention on that. I'd say that'd be my best advice I could give anyone watching this or listening to me. Put in the effort. If you want to practice a new strategy, or you just want to practice thinking like a market maker, put it in there. Put your thoughts into that and see how oftentimes you're right. Because I can tell you for certain that if you go back just 3 weeks, you won't remember what you thought and what your intuition might have said. Like a little girl's diary where she writes in all that stuff like, oh, today my day was nice, I went to school, blah blah blah. Because you forget. You don't even remember what you dreamed last night most of the times. How do you want to remember what you anticipated prior to the 9:30 open on the 2nd of August? But going through all this data can really help you to understand yourself better. But first of all, you have to make the effort of actually putting in the work and doing this on a daily basis. Closing your chart, set your profitable trade, take your screenshot, open up your OneNote and start to journal. More about to understand yourself and the way you think and how well your intuition works. Because we tend to forget. We tend to forget what we do on our worst trading days because we simply want to avoid even thinking about it, where we blow the accounts and simply overtrade or use poor risk management. Like journaling that, nah, I blew the account anyway, nothing to learn from that. Let's just buy another one with a 90% discount. I hope you get the idea. Otherwise, I wouldn't be stressing too much about that. Put in the work, study yourself, and yeah. It's not really so much about our PL. It's more about what we think. If we improve, our PL improves automatically. Our consistency improves because we know ourselves better. We understand sometimes when that thought comes up to like, okay, that sounds like I'm getting greedy again. You see that stop sign? And then the question is if you actually stop, switch to a paper trading account, or simply close your chart. You're done for the day. No reason to look at it. Go outside, spend some time with family or friends, and get on with the day. Of course, do your journaling, otherwise you will forget. I know it's hard, sucks, but you learn so much from that. I luckily have the live stream recordings to just rewatch. I do that every weekend to see what I was thinking, because most of the time I'm thinking out loud what I want to see. So yeah, just take that little bit of advice and do it. Use OneNote, use whatever you want, but keep track of more than your PL. Because you can have a very good day, PL wise, but well, you ended up gambling, or you ended up taking trades you didn't really plan or think a lot about. You just entered and then you see, okay, this was a very good day in terms of my PL. I made 2% profits. What happened on that day? Well, and if you then would, paired with that, have your entire thought process, what you anticipated before the London Open. I get to the chart, I take a screenshot, and I start to take some notes. What do I anticipate before the London Open? See how often your anticipation is actually right. I know it takes effort. We have the time, really. We're just lazy most often. And then you do your London session, you keep journaling all that, you take your break, you come back for New York if you have the time, or if you don't trade London, just do it for New York prior to the 8 a.m. Open or 9:30 Open. What's the idea? What could happen? Take a screenshot. We already spoke about that. That 9:30 long, we see trapped volume, blah blah blah, new week opening gap, volume point of control, add all the conferences you like. Trading the 9:30 is pretty risky, so might not be the best idea to do that like I did today. Even though it played out, you can start doing that once you actually start to recognize, hey, it's actually working the way I think. After spending so much time in front of the charts, I understand how ES or she moves. It's like being in a long-term relationship. You kind of get to know your partner, and it's the same way if you really spend so much time in front of the S&P 500 futures chart. That's why I like focusing on one chart instead of having a look at 5 different charts at the same time. Focus on one, do a good job, understand how it moves and how it behaves, how many points it moves. Eventually, you're gonna learn that stuff and it becomes part of your intuition, and then I think that's where you take off as a trader. How market makers manipulate that specific pair. If you always switch between gold, index futures, oil, euro US dollar, pound US dollar, I don't know, can go back to that same metaphor. If you have 6 different girlfriends, you have a pretty hectic life. But yeah, enough of that. I don't think there are any more questions. If there are, feel free to ask. Otherwise, that's gonna conclude the live stream. And I hope everyone is going down to start journal a little bit more, especially their thoughts. What's gonna happen pre-New York Open? What do I think? downloading notes. Well, whatever works for you, whatever user interface or app you like. I like OneNote because, like I said, it's on my iPad too, and I can look at that, take some notes. But yeah, it's really worth it to it. And if you have, imagine having 2 years of all that data. So how awesome would that be? Like 2 years of your actual progress, other than you just, I want to say it, sitting in front of the chart, sometimes like a retard, over trading, managing your risk not properly. You forget those things. So yeah, I hope that's gonna sum up the live stream for today. And yeah, I will be back tomorrow. Maybe gonna share a trade setup for the PM session. We'll see what we get. Take one last look at it. One last look, doesn't hurt. We keep on continuing higher. So we just had a short fake out to the downside, anticipating higher prices once we close above our bearish fair value gap. We played around for a little bit, but eventually we kept on expanding based on our buy side liquidity target here on NQ being right up here. So we could still see higher prices. And if we bring that back to our daily analysis, getting rid of all the intraday stuff right here, sweep, gone, don't need 1 minute time frame stuff on my chart, and turn on the daily analysis, we can see that we are almost at the 50% of the highest for our bearish fair value gap that we have before we hit buy side liquidity at 4566. Bringing that to the daily time frame, the buy side liquidity I'm referencing would be this first high. Right there, end of year run. Making a little bonus for Christmas. Our beloved market makers or hedge funds or whatever. All right, that's gonna sum up the live stream. Thanks very much for joining in today. Make sure to check out all the links in the video description if you're watching on YouTube. Otherwise, yeah, that's gonna sum it up. I have nothing more to say. No more questions. So take care, guys, and enjoy the rest of your day. Bye. And for everyone that's watching on YouTube, thanks very much for liking the stream. If you haven't yet, maybe